Hey traders, Dennis Wilburn, the AutoPilot Trader. Today's market's kind of heading to the downside. We're going to be taking a look at the three indexes. Plus, I've got a great tip on how to swing trade growing downside momentum. I've got some tips that will hopefully help you be profitable and continue growing your wealth as we watch this market continue to melt down. Let's jump into today's session right now. Okay, let's jump over into the charts on the indexes, and we'll start with the S&P. The spiders is what we'll use to simulate the S&Ps. As you can see, with the price action today, what is going on? We had a nice rally going on for about 3 to 4 days, but like the past rally of a few weeks ago, we get up here 3, 4, 5 days and then hit resistance and roll over. That's exactly what's happening again. We hit the 34 resistance at the 34-day moving average, and now we are in fact rolling back over to the downside. The market's still live for a couple more minutes. If we break this trend line, then we're probably going to go down here to either the 373 or even down here to approximately 365 to 363 level. TSI has crossed to the downside. There's the bell. Has crossed to the downside. However, is still holding at the zero line. Those are all positives for the time being. Okay, what about the NASDAQ as represented by the Qs? Interesting perspective. Let's see, on Friday of last week, we actually had an intraday new high. So we are, in fact, working off of a higher low, higher high. So there was a shift in trend, kinda. However, what's going on down here? TSI has crossed down to the downside. And if we draw a trend line in here, we will see that the momentum has actually shifted, or is in the process of shifting down. We didn't totally break it all the way down to the downside on the momentum indicator. However, as you can see, approaching that zero line, we'll see if we get a bounce there. Right now, I'll be waiting for the three-step setup on all of the indexes. Excuse me. And what is that? I'm waiting for, find a support at a recent support zone. Secondly, look for a candlestick reversal candle. We do not have that. The last one we had a reversal candle was right down here on the bullish engulfing. Right now, we are heading down. There was not a candlestick reversal signal to the downside, so we'll see if that spells that this is just a temporary pullback, or are we going to get some momentum, additional momentum to the downside? And then last but not least is I'm waiting for that momentum shift. Now that the momentum has shifted towards the downside, we'll have to see where it rebounds. Next, the Russell. The Russell is, again, I think right now one of the strongest of the indexes. And as we see, it is pulling back into support. It's got support down here at the 167 level. But notice we have broken back below and closed below for 2 days in a row, below the 8 and the 20-day moving average. We had hit resistance up here at the 34-day moving average before this reversal. We'll see how far it in fact falls. Notice also, as we're taking a look at this, volume is quite low. So what do? Basically, one of the things we can do is just stand aside, wait for price actions to find another bottom and then reverse. We can also draw a trend line across these lows here. And that may be where price action bounce. There will be technicians that are out there watching that trend line on the IWM. Or if we are in fact going into a downtrend, what about how do we trade the specifics for the momentum shift? That's a great question. We'll be taking a look at that here momentarily. and spec about that, we might as well do it right now. So just a reminder that all the materials we do present are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. So one of the questions when it comes to momentum, ask yourself the question, does it seem like you're late to the party all the time? You miss these momentum shifts, or are you just in time? I think Jesse Livermore, and I'll leave you with this quote. Jesse Livermore said, "Don't take actions with a trade until the market itself confirms your opinion. Being a little late in a trade is insurance that your opinion is correct." I know one of the things I had to fight when I was just first learning how to trade is I would tend to get into trades early and then suffer from the whipsaw of being whipped to and fro. Now that I use the 3-step setup, I do that less often. In other words, as Jesse said, don't be an impatient trader, Jesse Livermore. So remember, if there is no setup, there is no trade. Waiting for it, like in this case, the TSI momentum indicator to cross either to the upside or the downside, waiting for the cross, and then playing the price action from there can be great advice moving forward. So buy right and sit tight. So with that in mind, how do we handle these momentum shifts? And one of the things that if the momentum is heading down, one of the things you can look at is look to trade if you're not an option traders, look at trading the leveraged inverse ETFs on the indexes. The Spider, the S&P, the NASDAQ, the Russell. And then you can also jump down into what's going on with the sector ETFs that we watch. That's one of the things we do offer for our members of the AutoPilot Trading Combo Service is we do trade all 7 of the best ETFs that are available out there. Three indexes, the S&P, the NASDAQ, and the Russell, and then 4 sectors. And we wait for things like this to happen. Now, I encourage you, do not poo-poo the potential of trading the leverage ETF to the upside. However, keep a couple of leverage inverse ETFs to the upside. While like in this case, if the spiders are falling, SPXU is going up. One of the things is keep your expectations in check. You can get a really good return on these. However, you have to be very, kind of quick on the trigger, if you will. So now we have a crossover here. TSI, or the market forecast, had a 2-line cluster on on Friday of last week, and then we reversed. We broke above the 8-day moving average. And so if we continue to climb for here, where's our potential profits? Well, potential targets. Well, one there at 2083, and the other one will be back at these past highs. If I took a trade off of the 820, which is about there, and I move up to these past highs, well, it's about an 8% gain. If I make it all the way back up to the highs from a few weeks ago, we're talking about 18%. And in a very short period of time, that's an excellent gain. When it broke here and jumped up off of 50, that's 17%. And these leverage ETFs have the capability of doing that over and over and over again. That's why we trade them succinctly. Another one that we can take a look at is SOXS. SOXS is in an uptrend. It is bouncing off the 20-day moving average. If it breaks up and just gets back up to the past high, what type of a run is that? Well, that would be a run of, make sure I get that all lined up, about 24%. And again, as I said, these leverage inverse ETFs repeat this kind of action over and over again. Keep in mind, I'll be looking at taking profits somewhere between 1 and 5 days. I don't want to, this is not a long-term hold on these inverse ETFs. They move very quickly. And so you get in, you get your profit. You may not capture the whole profit, but aim for the middle half of the profit. So if it runs 20%, if you can pick up 10%, muy bueno, excellent. So that's what we've got for today, guys. I hope you have a fantastic rest of your week. We will be back online on Thursday for what's going on with the market with another market update. If you have any comments, leave them down in the comments section on the AutoPilot on the Market Tech Talk YouTube channel. And if you would like to get more information about what we're doing with AutoPilot Trading for these combos, so we can trade both ways, regardless of which way the momentum swings, because the momentum is either swinging up or it's swinging down. It's nice to have the tools to be able to trade in the direction that the momentum is going. So aloha, God bless everybody.